Hey everyone, and if you've been watching your portfolio lately, you've probably been asking yourself one very important question about one very iconic stock: what on earth do I do with Apple right now? So let's talk about it, because Apple has been one of those names that investors love to debate, and honestly, right now the debate is more heated than ever. Yahoo Finance recently put out a deep dive into exactly this question: buy, sell, or hold, and the answer is actually way more nuanced than you might expect. First, let's set the scene. Apple is still one of the most valuable companies on the planet. We're talking about a company sitting comfortably in that $2 to $3 trillion market cap territory, which is just a mind-boggling number when you really stop to think about it. But here's the thing: being big and being a good investment right now are two completely different conversations. On the bullish side, and there are some genuinely compelling reasons to be excited here, Apple's services business continues to absolutely crush it. Think about everything you pay Apple for: iCloud storage, Apple Music, Apple TV Plus, the App Store, Apple Pay. That recurring revenue stream is growing faster than the hardware side of the business, and that matters enormously because services carry much fatter profit margins. Investors love predictable, sticky revenue, and Apple has built an ecosystem so deeply embedded in people's daily lives that customers genuinely struggle to leave it. That's a moat, and it's a wide one. Then there's the iPhone upgrade cycle to consider. With Apple Intelligence and AI features being rolled out across their device lineup, there's real anticipation building around the idea that millions of people who've been holding on to older iPhones for 3 or 4 years might finally be ready to upgrade. If that super cycle materializes, and that's still an if, it could provide a meaningful revenue bump that surprises even the most optimistic analysts on Wall Street. But here's where it gets interesting, because the bear case is just as compelling. Apple's valuation is, let's be honest, pretty stretched right now. The stock trades at a premium price-to-earnings ratio compared to many of its big tech peers, which means you're paying a significant premium for future growth that isn't fully guaranteed yet. China remains a massive wildcard. A significant chunk of Apple's revenue comes from that market, and the geopolitical tensions, combined with rising competition from domestic Chinese smartphone makers like Huawei, are real headwinds that aren't going away anytime soon. And then there's the AI question mark hanging over everything. Apple has been relatively late to the generative AI party compared to Google and Microsoft, and while Apple Intelligence is promising, investors are still waiting to see whether it actually moves the needle in a meaningful, measurable way. The hype is there, but the hard data on whether AI features are actually driving sales, that's still developing. So where does that leave the average investor? Well, most analysts right now seem to be landing in that hold territory, with a cautiously optimistic lean. The fundamentals of the business are genuinely strong. The brand loyalty is unmatched. The balance sheet is fortress-like. But the near-term catalysts need to play out, and paying a premium valuation requires everything to go pretty much right. If you already own Apple, the case for holding is solid. If you're thinking about jumping in fresh today, the smarter move might be watching for a pullback rather than chasing the stock at current levels. Apple has proven the doubters wrong so many times before, but markets don't run on history alone, they run on what's coming next. And the real question isn't whether Apple is a great company. We all know it is. The question is whether it's a great stock at this price, at this moment, and that's something only time is going to answer.